We only got a couple Mondays left here, Imran, and we're back for our Monday morning meetings. I think we are on week 6, maybe something like that. But people seem to like it, so give the people what they want, right?
Yeah, exactly.
A couple of interesting moves to talk about today. As everybody knows, we like to focus on single stocks or kind of non-index flows in these conversations. We have a big expiration coming up next week with FOMC and CPI, so we think next week's going to be real interesting. But I caught a couple of interesting sector moves today after Powell's comments last week, and then I noticed that you have 2 interesting names, so let's dive into that. Why don't you start with the 2 names that you have lined up here? It looks like you're buying cat puts and buying Google calls, so you're getting on the bullish bandwagon for the first time in a couple of weeks, it seems like.
Yeah, I mean, like I say, this isn't really my discretionary views. I'm just kind of pointing out the things that are most stretched on our compass, right? So you can see if we look at cat firsthand, had a decent bounce off those lows, started selling off in mid-October.
Right.
Has retraced about 60% of that move. It's got a little bit of volume shelf resistance up there around near 260. So as it's heading into that area and it looks quite stretched and the vols are quite low, we think December puts look reasonable here as an entry. Again, if you're not bearish the market, you don't want to be doing that. If you don't think the market needs to consolidate as a whole, you probably don't want to be buying puts. But, you know, I kind of, in terms of my feel, I kind of feel like this is the week it needs to pull back. Otherwise, it's just going to keep rallying into year end. Like it's kind of, this is like the last opportunity it's got to actually pull back, because I've been banging on the pullback for like 2 weeks. It just hasn't happened, right? So I'm like, I'm definitely going to throw in the towel on any of my shorts this week if it can't go down this week. Right? So anyway, cat's flagging there, and then on the more longer term bullish side, because it does look like we're going to have the January effect and Santa rally. So even if there is a little pullback this week, Google, I mean, it's not like it's pulled back that much. Google is pulling into that 132 area. There is a bit of volume support there. It could arguably get back down to 125 if you were lucky. That would be a great entry point. I'm not convinced it's going to get there, to be honest. So layering into some January calls, we think looks good if you are trying to pick up some long exposure. If you're not long enough, we don't think that's a bad thing.
That's this market for you. It's like wrong is not long enough as opposed to being bearish. It's kind of funny. I too think we have, forgetting the January effect, I think this week is obviously the last chance we have for some pullback, particularly these next couple of days, because there's so much gamma set to expire in mid-December. I think that charm effect kind of holds everything up here. So they kind of bind the dips on some of the weakness, like Google here up into the 140 area. I think that could be that makes a ton of sense. But I also like this idea of cat puts, because this vol is also cheap, that if you can time it right, and we do, God forbid, get a little bit of a pullback here, a little bit of consolidation, some of these long vol positions will pay off pretty well. So interesting ideas there, Imran. I've been prepping these sheets here. On the top, we have our squeeze scanners, and I didn't find anything interesting on our squeeze scanner, but plays into two key themes. Number one, gold broke new all-time highs over the weekend after Powell's comments, and then I think there's another flare up in the Middle East, unfortunately, so that adds a bid. And then the digital gold stuff has just been going bananas. Both of these Bitcoin names and gold names showed up in our previous conversations on these squeeze scanners. And what's interesting is you need the macro to trigger some of this stuff, but it's almost like there was some pretty sizable traders who were picking this up, right? Because these positions were showing up over the last couple of weeks, like gold we were talking about last Monday for sure. But, Coinbase showing up on our squeeze scanner now, I mean, I just don't know, it's hard to say you want to buy this stuff, because now you're just making a very leveraged bet, I think, on Bitcoin going higher at this point, which, you're the crypto guy here. But in terms of buying options, right, in Bitcoin or in Coinbase or something, I think you missed the boat on that, because you're going to be paying a pretty high vol. But these things could obviously continue higher if Bitcoin continues to rip. I mean, look at that. That's a widowmaker trying to short something like that, I think. Mara, Sorry, go
Yeah,
ahead.
no, so yeah, we've done all right on that move because our crypto weekly product has been long. It's funny. The idea is I'm generally long crypto, and then I have a hedge ratio. I use options to hedge my exposure, but when I'm really bullish, I don't hedge. I use options to get even longer. So we've been running net long on top of our holdings, which worked. But the first target was about 42K. If 38.5K broke, then 42K was the first target. So I'd be surprised if we blast through 42K in one shot. So I would expect a little bit of consolidation here. But the truth is, yeah, I mean, it probably does continue marching higher. It's just a question of how quickly, because as the ETF floodgates open and money gets put into work, I mean, people have been front running it. So there might be a little bit of a sell the fact move when the news hits in early January that the ETFs are approved, and the market's very much pricing that in now. So does it need to really knee-jerk higher on that news, or would it be mainly priced in? I think probably the latter. But Ethereum is the next narrative. That's going to basically, there's going to be an ETF coming on that most likely at some point. That's been lagging behind massively. That could re-rate 30% higher in a month easily, right? So I think that's the real opportunity for me is Ethereum, using options in Ethereum, because the vol's actually similar to Bitcoin vol, which historically it used to trade 10 vols above. Now it trades similar vol levels to Bitcoin. So that's the real opportunity there, I think.
Incredible insights there, Imran, on the Bitcoin space. So it's getting the tailwind of both the digital gold Powell pump, I guess, with people just read him as not hawkish, so that meant to buy everything. This name here, CLSK, didn't show up on the squeeze scanner, but this is a Bitcoin miner. It really jacked higher on Friday as well. So all of these crypto names that show up on the top here and downside, the vols are very jacked up in these things, and so on the face of it, you want to say sell calls and all this sort of stuff, but it's like I said, I think these can be widowmakers. So you want to play, I think, to play short vol here, where they're showing up on the scanners. I think a lot of it seems overdone in the short term. You want to make sure you take very defined risk if you do want to short vol in the crypto stuff. I think I just sort of stand back in these situations where I don't quite know enough. And anytime you have the underlying kind of commodity, so to speak, like crypto driving, say, Coinbase or Mara, it makes it a little less clear how to play it. Whereas if GameStop is rallying because of the Wall Street bets jokers, I play in that arena every day because I feel a little bit better. But, I was looking at here's the only other name is Salesforce here. And, this thing's just had such a big pop after earnings. I feel much more comfortable selling calls or call spreads in something like this. But it does show up on the squeeze scanner, which is interesting. The squeeze scanner says there's strikes above. And so kind of like your daily compass, this is an indication that this is a name which could continue to sharply rally. So that's really ultimately what the squeeze scanner is showing us. The names that I actually flagged, though, for purposes of our conversation, these gold names are ripping higher. Because I'm an older man, I tend to like gold more than crypto. Like we said before, all new fresh all-time highs here. There was a couple of these names that popped up last week for us, which I thought was interesting. Newmont Mining actually shows up on our VRP scanner, which tells us that there's some volatility premium. But the difference in this case, I think, is that these names have had very, very low volatility. As you can see here, it's been a really tight trading range. And now I think that there's call buying. It's showing up as there's some volatility risk premium. But what I think is happening is people are starting to maybe front run a gold breakout. And so I actually, instead of trying to sell vol in these names, I like a risk reversal, selling, some 35 area puts in Newmont Mining and getting long some maybe 40, 45 strike calls, something like that, with a little bit of time, because I think these things could really run. Newmont Mining and gold, I like being long these two. Sorry, that's the gold. Barrick Gold is symbol GOLD. I pulled up the ETF there. So I like being long GOLD, the stock in NEM, which is Newmont Mining there. And then the other name that showed up on our volatility risk premium scanner here was IWMs. IWMs have rallied into their call wall, which is 185. This is the call skew that's changed. This is the 1 month roughly call skew in IWM. Everyone got very bullish towards the end of last week, right? IWMs really outperforming the broader market. S&P 500 and the Qs Dow hit all-time, not an all-time high, but a year-to-date high as those really caught a bid last week. So those are starting to be crowded longs, I think, in the volatility space. So I like selling call spreads in IWM. I would like to choose actually the 12/15 expiration, which is next Friday, and focusing somewhere around the 190 strike. I think we could kind of rally up in the 190 area maybe. But as OPEX is next week, I think some of these moves slow down. So I like playing some short-term consolidation there in the IWM space. Last thing I would note before I get your thoughts on this, because this is kind of the macro piece, which I know you cover a lot. You can see on the volatility risk premium scanners, there's a bunch of utility names showed up on here and rate names, obviously with Powell's comments last week. So you see TLT, TNA, both rate names, LQDs on this list, IYR. So the rate vol became a theme again last week because of Powell's comments, which ties into gold moving quite a bit. And then obviously crypto exploding. So there's a real theme here, which almost seems to be apart from the equity space. I mean, yes, you want to get long of equities if rates are coming down, but people are really focusing a lot of attention on what seems like a refreshed rate play, which is something that came up at the end of October when we started to really rally strongly in the markets. That quieted down, but Powell, he speaks last week on Friday, which causes a rate-sensitive rally, I call it. But then we have FOMC in a week. And so I think if his comments, maybe if we rally another 10% here, I don't know, in the broader market, if he's going to really come off as dovish again, maybe brings more of a hammer. I don't know. It's a very interesting period here, sandwiched between where we sit now and a week from now having a couple of big events. I said a lot here, Imran. Fire back on me on anything that comes to the top.
Yeah, no, I think you're right that the rate story is very much in the spotlight because financial conditions have eased massively on this latest rates move, right? So that's why everyone was kind of thinking that Powell's going to want to push back on this, yeah? Because the more you ease financial conditions, the harder it is for inflation to come down, in theory, okay? So I think the market kind of tactically thought Powell's going to have to push back after what we've seen in November. And then when he didn't, there was an unwind of short. So hedge funds got annihilated. All the most shorted stocks ripped like 5% plus. ARC names ripped. Mega cap tech was the thing that was down. And then everything else was ripping. So it was like an unwind because people were just like, oh my God, he didn't push back. So does that really mean we are well and truly done with rates? And the cuts that are being priced into the curve are actually real. Because what Wallace said, the thing that surprised the market is what Wallace said about next year was that rates can be cut even if the economy is not in a shit show, right? Even if the economy is like going along nice and slow, right? If inflation is back to 2%, then these rates are too high. So the market was kind of surprised because the market was thinking, oh, rates are only going to get cut if we have a recession. They're not going to need to cut rates if we just keep going along as we are. But he kind of said, actually, rates are too restrictive if inflation's at 2%. Mm-hmm. If inflation gets back to target and it looks like it's headed there, they don't want to keep rates ridiculously restrictive like where they are now. And so that was the thing that got the market excited. And that's why everything's ripping to the upside.
Awesome analysis there, Imran. And I was trying to flash up a bunch of different rate-related charts here, and the yield, those yields all really plunge. So it's a crowded trade, I think now, at least in the short term, as everyone really does front run. And then it seems to be the interesting thing now is that moves get extracted so quickly, right? People pounce on the crypto rally stuff. People pounce on the rate trades. TLT's been on our volatility scanner now for so long, and you say to yourself, well, what is that about? Well, at this point, this isn't about selling puts, right? It's about the crowded long. In a lot of ways, and that seems to be a real theme here, which I think could be an interesting one.
Macro Alf, our friend who's appeared on the Avengers show that we did, he put out a piece saying that the guys who the whales in the bond market are like the pension fund types, right? And they've been somewhat absent in buying bonds when we've been in a high inflation regime. But now that inflation's coming back down, they are very incentivized to park money back into bonds because the yields you're getting in bonds help them match their long-term liabilities in all the pensions that they have to pay, right? And also in a lower inflation regime, the correlation between stocks and bonds tends to be more negative. So you get massive diversification benefits from having stocks and bonds together in a portfolio like the risk parity guys. So risk parity got killed in 2022 because inflation was still too elevated. The stocks and bond correlation was high. If that correlation drops, which it should do if inflation's lower, then it makes bonds much more attractive to those type of big institutional investors, and that supports the bond market and puts a bit of a floor under bonds, right?
I mean, isn't part of the argument of that narrative that if a lot of these larger funds and risk parity types do start rotating heavily back into bonds, and that should be an equity negative, right?
Yeah, it might be. Yeah, he's not making a call on equities. He's just saying that he's saying a reason why he thinks bonds will be looking attractive to those big players, basically, right? So.
Yeah. The thesis certainly makes sense. That is a nasty candle there left.
Yeah, I don't know what's going on with gold. I mean, I bought some on Friday because I'm like, this thing's going to break over the weekend. I didn't leave any limits to sell it, and it rallied. And now, I stopped out of entry, so I'm out.
Every time, man, this thing. I can, the number of times that I thought like, this is finally it. I mean, you can see it finally, right? Finally. There's like every reason for gold to ever rally is here, and it just, wow.
That's a reversal candle if ever I've seen one, right?
Oh man. Anyways, I'm sticking with this idea of selective longs and Newmont gold. I like that, and then again, some of those IWM call spreads. So, we gave the people way more macro than we typically do on this call. We are, of course, doing our monthly OPEX live. I think we're going to do that next Monday, so hopefully everyone can check that out.
But don't forget, you're going to be my guest. We're going to turn the tables. So you're going to be my guest on Real Vision this Wednesday.
How do people watch those Real Vision shows? Not just from me, of course, but you talked to a lot of great people there. Yeah,
I've had Chris Sidhu on there. I've had Jem Carson on there. So, it was about time I got you on there, mate. So
I'll have to come up with something interesting to say. Well, Imran, I thank you so much for meeting us this morning. We're 10 minutes before the open, so we've got to squeeze this one out, get it out there on the YouTubes and the Twitters or X's and the like. Real quick, on the top is a QR code. If you scan that, you can get to academy.spotgamma.com, where you and I have put a course together. You take us all the way through what an option is, all the way up to advanced portfolio hedging. So we recommend that everyone takes that course. How else can people get a hold of you?
So I'm options_insight, at options_insight on Twitter. We put regular stuff on there, giving you a few of our sort of insights in what's going on. But if you really want the juice, come over to our website. We give everyone a free month of all of our products, the entire bundle. We cover macro, crypto. We've got daily products, weekly products. I've got an options portfolio that I run, so you get to see how I look at things, how I break down the Greeks, etc., etc. Come check us out.
Awesome. You can reach me at SpotGamma on Twitter. You can reach us at spotgamma.com. You get a free 7-day trial of all of our various products. The Squeeze scanner and the VRP scanner is coming with a larger launch we're doing here in the next couple of weeks. So sign up now to get a free look at that, and we will see everybody next Monday.